Good morning and welcome back from the holiday, a surprising one for Business Morning, I should add. So I would say, well, happy Labour's Day. Welcome back from there. And now let's face our realities. From the business perspective, I'm Ini John Mekwa, and this is 55 minutes of current and relevant business conversation. That's what we do on Business Morning. We start from the global space and say oil prices pulled ahead in early Asian hours on Friday after China said that its door is open for talks with the United States, raising hope of a de-escalation in a bitter trade war between the world's two largest economies. So for this morning, we see a gain on Brent, 38 cents. That's about 6%. Up to $62.51 a barrel, $59.62 after a gain of 0.6% is what we have for WTI. And China's Commerce Ministry said that the United States has recently taken steps to open a dialogue with Beijing by conveying information through relevant parties. Concerns that the broader trade war could push the global economy into a recession and crimp oil demand, just as OPEC Plus group is preparing to raise output. They've weighed heavily on oil prices in recent weeks. However, the signals of a potential easing in trade tensions between the United States and China, two of the world's biggest importers of crude oil, is supporting sentiment towards crude. Oil prices were also underpinned by a threat from U.S. President Donald Trump to impose secondary sanctions on buyers of Iranian oil. Trump's comments follows a postponement of U.S. talks with Iran over its nuclear program. It had previously restored a maximum pressure campaign against Iran, which includes efforts to drive the country's oil exports to zero to help prevent Iran from developing a nuclear weapon. Oil prices had gained late on Thursday's session to settle nearly 2% higher on Trump's remarks, erasing some of the losses recorded earlier in the week on expectations of more OPEC Plus supply as coming to the market. And the meeting for OPEC Plus comes up on Monday next week. The African Development Bank Group has approved a new 5-year country strategy paper for Nigeria, committing about $650 million annually from 2025 to 2030 to drive economic transformation, build resilience, and foster broad-based prosperity. The bank disclosed this in a statement published on its website, saying that $2.95 billion would be provided over the first 4 years of the plan, to be complemented by an estimated $3.21 billion in co-financing from development partners. The new strategy focuses on two key priorities areas: promoting sustainable, climate-smart infrastructure to enhance competitiveness and industrial development, and also advancing gender and youth-inclusive green growth through industrialization. According to the bank, the strategy aims to close Nigeria's infrastructure gap, estimated at $2.3 trillion between 2020 and 2043, by investing in climate-friendly roads, electricity expansion, clean water systems, and supporting agribusinesses that create jobs, especially for women and youth. The investments are expected to support Nigeria's ambition to double the size of its economy to $1 trillion and create about 1.56 million jobs. Nigerian regulators have imposed strict demands over data protection on the tech giant Meta, which Meta claims has been unrealistic. And following this, Meta says it may be forced to shut down Facebook and Instagram in the country, citing unrealistic demands on nearly $300 million in fines imposed by at least 3 agencies. The Federal Competition and Consumer Protection Commission, that's the FCCPC, had upheld a $220 million fine on Meta Platforms Incorporated and its subsidiary WhatsApp for violating the country's data protection and consumer rights laws. The penalty, which Meta must pay within 60 days, and this was last week, about 6 days ago, was upheld by the Competition and Consumer Protection Tribunal on Friday, following a comprehensive investigation. The FCCPC's probe, conducted in collaboration with the Nigeria Data Protection Commission, The NDPC identified multiple violations, including unauthorized sharing of Nigerian users' data, lack of consent mechanisms, and discriminatory practices that treated Nigerian consumers differently from users in other regions. These findings were based on a 38-month investigation, according to the investigation that began in May 2021. The Commission emphasizes that Meta sanctions contravened the Nigeria Data Protection Regulation and the Federal Competition and Consumer Protection Act 2018. Through the UK-funded Manufacturing Africa program, the UK says it has the intention to fast-track investment by supporting Africa Growth Impact Fund 2 with due diligence, corporate finance, ESG compliance, gender inclusion, supply chain and manufacturing operations support to eligible manufacturing companies targeted. And then the British Deputy High Commission in Lagos recently met with stakeholders to emphasize their commitment to this program.
And we know that manufacturing businesses can attract foreign direct investments, which they can then use to produce higher added value goods and create high quality job opportunities. And that's why, through the UK-funded Manufacturing Africa programme, we're supporting investments into the continent's manufacturing sector. The programme so far in Africa has attracted £1.8 billion. It's operational across 4 countries in East Africa, Kenya, Rwanda, Ethiopia and Tanzania, and 2 in West Africa, Nigeria and Senegal. And in Nigeria, it has supported 41 deals that have created over 38,000 jobs. And 13 of those deals have reached financial close and resulted in over $150 million worth of foreign direct investment.
Unity Bank has launched GenFi, an app targeted at reaching kids and teenagers between the ages of 8 and 18. GenFi by Unity Bank is a financial platform designed for kids and their parents and guardians to help them learn about and how to manage finances together. Management of the bank says this new product is aimed at making the young within our society financially literate and responsible.
Children drawn from 8 schools within Lagos are here at the headquarters of Unity Bank to witness the bank's latest product, the GenFi.
Or learning from an expert.
The young ones are here with their parents who are also invited to understand how the app works. Managing Director, CEO of Unity Bank PLC, Mr. Ebenezer Kolawole, in his address says the new product is in line with the bank's future plans.
Today, we in Unity Bank celebrate more than just this app. We celebrate the dreams of the youth, their ambitions, as well as the power of discipline and financial planning to shape their future. So I therefore bring you warm greetings and goodwill message from our board, from our management, as well as the entire staff of Unity Bank PLC.
Divisional Head Retail and SME Unity Bank PLC, Adenike Abimbola, states that the aim is to enable children become financially disciplined.
Imagine a teenager tracking their monthly allowances, budgeting for school supplies, and developing a sense of responsibility that shapes their future. That is the power of GenFi.
What's more important is that GenFi will involve children and their parents as they also experience how the app works.
The Kids tab is where all your children are, so if you have multiple children, if you click on Kids, you can see this person has only 1 child.
It's a very brilliant product because not only does it have the educational part of it, it also helps children execute. So you're learning about, saving and investing, and you are also executing by saving and investing.
Parents and children appreciate Unity Bank PLC for creating GenFi.
Parents guide and kids grow. some of the kids you have at home, you have out there, you really know if they actually inculcate these savings habits from childhood. But when they come to this kind of environment and they see people around, even getting to know where some of their parents actually works helps them a lot. It shapes their mindset.
It's so motivating for young kids like me, because there are also kids out there that don't have the privilege to see this kind of opportunities. So I want to say a big thank you to them.
I've learned how to save money, and that entrepreneurship isn't just about making money. It's about solving your own problems and others.
Gen 5 is designed to teach kids about saving, budgeting, and managing their money. The app facilitates communication between parents and children about their finances, fostering a collaborative learning environment and a demonstration of Unity Bank's commitment to the proper development of the Nigerian child.
That Nigerian consumers have become more sensitive seems to be, well, an old news by now, because of the macroeconomic realities that Nigerians have had to face in recent times. Well, a report by Seed Incorporated on Nigerian Consumer Outlook tells us the current trend for consumers in the country at this time. And we have right here in the studio to discuss some of their findings, the managing partner, Seed Incorporated, Olatubosun Akeju. Mr. Akeju, good morning and welcome to the program.
Good morning and thanks for having me.
Great. So I guess we shouldn't be surprised. We live in Nigeria and we know the realities. Absolutely. And we've seen things change in the last couple of years. Yeah. So the fact that consumers are becoming more price sensitive shouldn't be news anymore. Yeah. But what are the other trends that you find in carrying out your Consumer Outlook reports? What are the other trends that you saw?
Thank you very much. Quite interesting. Like you said, price sensitivity is no news. The fact that Nigerians spend a significant portion of their income on food is also not news. But I think there are other things that were very interesting that we discovered, like the second thing Nigerians spend most of their money on is transportation, except in the Southeast, where it seems like rent is the second thing that they spend most of their money on.
So you mean in the Southeast, yeah, rent overtakes transportation?
Yes.
Wow,
in the Southeast,
how do you explain that?
Sincerely, it's one of the things we're still trying to unpack, because an indicator of this problem is, I think, is Enugu State that is trying to come up with a new rent act or bill to be able to solve this problem. Another thing that Nigerians spend a lot of money, I mean, in Southeast, we found out that 16.4% of people's income was going to rent, while about 12.3% was going to transportation. But in...
Sorry, say that again, for transportation?
For transportation in Southeast, it's 12.3%, but for Southwest, it's 24.6%.
For rent?
For transportation.
For transportation.
So across the country, transportation is the second thing people spend most of their income on, of course, after food.
When you look at it
nationally, transportation is number 2. But for Southeast in particular, where there seems to be a bit of an anomaly, rent is the second thing.
Because one would have thought that a lot of residents of the Southeast are from the Southeast, so they own their homes, and so they don't spend so much on rent.
Yeah, it's something that we couldn't unpack, I must confess, because we're still asking the question, what's really going on in the Southeast. And the third thing people spend most of their income on is education. Very, very interesting. Wow. And we also discovered that a lot of Nigerians are planning to spend a lot of money.
Do you have a percentage for the education?
For education across the country, we're looking at about 10.3%, but it then varies, across the socio-economic, the social region.
Yeah, but that sounds like a comforting thing, that education is, even though it's on an individual basis, it would have been nice if it was a national, I mean, from the public sector. So that means more attention is being given to education. That's hope for the future.
Yes and no. One of the things we try to do in this report is to identify the problems in an empirical way, and then to also be able to identify the opportunities that come with it and the policies that needs to be in place for us to be able to harness the opportunities. Spending, of course, a lot on food already is a challenge, but it also, shows an opportunity that food companies can thrive in Nigeria, agriculture can thrive in Nigeria, and there's economic opportunities and commercial opportunities when it comes to food. And we can see the evidences around us. In education, it shows that we can find a more concerted effort to fund education rather than just make it only the way we approach it right now. And I can draw a parallel between how the logic behind health insurance is let everybody pull a pool of money together so that those who need it the most can get the best out of that pool. And I think that opportunity exists also in education.
So I want to talk about food because I'm sure you know that our inflation basket has been rebased, and food has been given a lower value than it used to. Because according to the NBS, now Nigeria has a wider or bigger basket of expenditure. So you have things like your technology, your telecommunications, your entertainment at home. And from your findings, doesn't it look like perhaps the NBS has missed out something if you find that most of the spending in the country still goes to food? Doesn't that mean that we may not be able to capture the real inflation numbers if we are not giving as much value to food as we should?
To be very sincere, I do not know and understand the logic behind that approach of the NBS. And for us, who, like I said at the beginning, it is a problem, and there's also an opportunity that comes from it, because when you look at other countries, I use the UK sometimes as an example in situations like this, what people who live in the UK spend a significant portion of their income on is mortgage or rent. And it comes with its benefit. Food, spending so much on food is challenging. I mean, there are parts of Nigeria where people spend more than 100% of their income on food. That means sometimes those people are not eating. So food inflation, there are many things that can contribute, and we don't have to downplay it. I think we just need to work towards solving the problem and harnessing the opportunity that comes from that challenge. And like if you look at some of the fast-moving consumer goods companies that are listed on the stock exchange, you can see their numbers. I mean, when you look at it from a dollar terms, it might not look like there's been growth, there's been significant growth, but when you look at it from the Naira terms, there's been significant growth, which means that there's a huge opportunity, you know, in the food business. So I just think that we need to look at the problem more closely and be able to solve it. We need to move from peasant farming to, you know, mechanized, and not just mechanized farming, technology-enhanced agriculture. I think it's one of the things we need to look, because we have to solve the food problem.
Yeah, well, I agree with you on that. Now, you also saw one of your findings is there's been the rise of necessity-driven entrepreneurship building from all of this, because you keep emphasizing the fact that you don't just want to look at the numbers, but you also want to see the opportunities. And I guess this is one of it.
Yes, so for my findings, 31.7% Nigerians, or, you know, the almost 8,000 people we interviewed, are self-employed. And what we mean by necessity-driven is that majority of the people who are entrepreneurs today are entrepreneurs for survival. There's a challenge with that, because it means that skill is not an immediate objective, or next to immediate objective for majority of them, just to improve their lifestyle. And when you have situations like that, it means that people can't, you know, the opportunities that can come from a business to become a better employer of labor is significantly reduced, because if my objective is just to make my life better, I don't really
to make your life better, or survival?
Survival.
At this point, I think it's just survival,
you know,
mostly.
So I think that, you know, policymakers need to look at it from that point of view, because it means that people need to be trained from a skill point of view and from a mental point of view. Businesses need to move from just being traders to being, you know, people that actually add value to whatever, you know, they're doing. And that way you can then build it to a point where you can scale it, and perhaps there are export opportunities that you can, you know, look at. But the numbers, like I said, again, is good that a lot of Nigerians want to be entrepreneurs, but how many Nigerians can build that company to become a significant employer of labor, to ensure that the business is actually very, very much sustainable? And of course, we also need policies that can guide, that can protect some of these businesses to help them grow and become a significant value adding entity to the economy.
And I also see that power sector, obviously, I don't think we can run away from that.
No, we can't.
You got some findings from there.
Yes,
and
yes.
You switched to alternative.
Yes.
Another survival strategy, I think.
Again, so the issue with solar and renewable energy, but solar specifically, is that there's a lot of changes that needs to happen. But first of all, can we have power? And a lot of Nigerians now are interested in having a solar system at home because it gives a guarantee of power. What that power is able to do for them, different levels, but it gives a guarantee of power for basic things. There's light, you can watch the TV, you can charge your devices. And we noticed that from above 35 years, the numbers and the percentage of people who want solar system in their house, who desire to have solar system in 2025, is significantly increased, you know, as you go up that range. And like I said, there are opportunities there again for funding, because one of the impediments and the challenges that people are facing there is solar systems are capital intensive. So you need financing system opportunities, finance product, buy now, pay later product that can help people to acquire that and perhaps move people a bit off grid. And maybe if people move off grid, I mean, we'll probably be able to move some of that. Provide
the grid will collapse less. Okay, but okay. So in general, in summary, what are some of the high points, you know, of this trend? So I mean, I'm still going to try to understand why in the southeast rent overtakes transportation when it comes to spending and all of that. But what are some of those high points that you think policymakers could use, you know, to guide them in decision making? I
think we should start from power. I think that people moving to renewable is something that really should be encouraged and should be incentivized by government. I think that food is something that government needs to look at holistically across the country and ensure that we can drive down the cost of food, ensure that our agriculture, there's a lot of technology in our agriculture, there's a lot of mechanization in our agriculture, we can move away from peasant farming to, you know, more technology-driven farming so that we can have more food in the country and drive down that cost. I think that government needs to look at the intersection between some of the challenges. When you look at the top 5 things that Nigerians are spending money on, we're looking at food, transportation, education, utility, and rent. I see an intersection of opportunity there. For example, the Lekki, the coastal road is going to create massive real estate opportunity along that axis. I think the time is right for government to look at a mass housing project in that axis, so that when that opportunity arrives, what would have happened is not only, you know, the capitalists, and there's no problem with the capitalists, but they're not the only one that have taken over all the, you know, property opportunities along that axis. Because what will happen is that people will move to that axis again, and then we're going to say that, oh, rent is expensive, houses are expensive there, but there needs to be that balance, you know. And also, we really, really need to look at our mass transit infrastructure as a country. Transportation is too expensive in Nigeria, and I think one of the reasons that expensive is because it's highly fragmented. We do not have a very cohesive way of moving people and goods from point A to point B, and without that, you know, we can't have the benefit of all the advantages that exist in the different parts of Nigeria. And I think that's one of the things that this report is screaming.
All right, so that fragmentation is also in the power sector, because I mean, Lagos State has continuously told us how much power individuals generate, which could power the whole state for like a year. But we don't see that because it's fragmented, unfortunately. Thank you so much for sharing your findings. Olatibo Akeju, Managing Partner at Seed Incorporated.
Thank you very much for having me.
Let's take a break now. When we come back, we'll talk about money, capital for investments. Join us again. Welcome back. It's time to talk money and discuss investments now. We're talking about investment themes for allocators. That's after about a week of conversation by the African Private Capital Association. Well, they took over Lagos. We saw the ministers there. We saw the governor there. We saw angel investors and everyone who even needed the capital. They were right there here in Lagos. So since we couldn't bring you every bit of that meeting that they had over, I think, 3 days or so. We are now speaking with the board chair of African Private Capital Association right here in the studio, Mr. Danladi Verheyen, right here. Good morning, Mr. Verheyen, and welcome to the program.
Good morning. Thank you very much for having me. It's a pleasure to be here.
Great. So how was it? You guys moved Lagos for days. I think that was before May Day, before the Workers' Day. 3 days you had the who is who from the financial sector. What would you say would be the gains of that? Because we do have meetings and talks every day in the world, even in Nigeria. So what are the high points of your meetings? I know you brought in capital people from all around and all that, but what stands out really?
No, thank you for asking me that question. It was sincerely a very nice event. We had about investors representing about $1.5 trillion in the room in Lagos, just expressing excitement about investing in Nigeria, investing in Africa. And so basically the association it's called African Private Capital Association. It's a gathering of investors and business owners and business leaders who are really keen to invest in sustainable businesses across the continent. And this conference, which is held annually, last time it was held in Nigeria was 11 years ago. It moves around different African cities. It's held annually and just brings everyone together to share exciting news, to educate each other on what's going on in our various markets, and to effectively mobilize more capital to come in. In 2024, about $5.5 billion were invested by this industry in over 485 deals, about 485 deals. $4 billion was raised alone for private equity, venture capital, infrastructure investments, and real estate investments. So it's really, real excitement.
Yeah, well, where there's money, there's excitement, I guess we could say that. But so when you say $5.5 billion invested in 2024, obviously very interesting, but it would be nice to know what sectors, you know, are most attractive at this time. We do know in the country now we have a lot of headwinds. That's our reality in the country, unfortunately. But I mean, Nigeria, it's not just in Nigeria. We have also in other parts of the world. We see these realities. We look at our currency and all. What sectors would you say are the most attractive and get a bulk of these investments?
So the investments in 2024 were literally across the board. Infrastructure, financial services, healthcare, education, software, technology, literally across the board. And I think this is just going to continue. There is broad excitement across various industry groups. Today, what's very interesting for investors is financial services, investing in banks, investing in insurance companies, investing in pension funds. On the consumer space, of course, leveraging this massive African demographic that we have and a Nigerian demographic as well, with 1.4 billion people across the continent, with 200+ million people in Nigeria who need goods and services. So consumer staples is a very, very interesting sector as well. We're seeing lots of money going to healthcare, the healthcare space, into pharmaceutical manufacturing, pharmaceutical retail, pharmaceutical distribution businesses. It's very, very exciting. Of course, venture capital deals. We see a lot of technology deals. We saw 2 unicorns coming up last year, and just a lot of capital. I think $2.2 billion alone was invested in early stage technology businesses. So it's really across the board.
And Nigeria is trying to drive the non-oil exports. Agriculture, I heard you mention health. I wonder how much prominence those sectors are getting.
So investors are quite interested in agribusinesses. You know, how do we stop from exporting commodities, right, effectively? And how do we begin to process our products here locally for both the domestic markets as well as for exports? So we're seeing capital interested in that space. In the pharmaceutical space as well, we're seeing just a lot of money going into, again, like pharmaceutical manufacturing. So we, for instance, supported Emzor. We've supported MedPlus as well. And those are 2 companies in the pharma space with really, really incredible entrepreneurs and lots of global investors had identified the opportunities that those companies presented and effectively invested in them via us. and just supported the entrepreneurs to continue to grow their businesses. Just trying to achieve, getting Nigeria to a position where, you know, people can access high-quality drugs at lower costs.
But the issue of infrastructure, you know, always gives Nigeria a level of weakness competing with the world, because what it does is it drives up capital costs, it drives up operational costs. So I wonder if infrastructure is also in focus.
Infrastructure certainly is in focus as well. And there's, you know, there's standard infrastructure of your roads, your ports, your bridges,
power,
you know, railway, power, right? There's also digital infrastructure, right? We're seeing a lot more base stations, so telco base stations being built. I think Nigeria needs another 30,000 telco base stations. We're seeing more coming into play. We're seeing data centers as well. Money is pouring into all of these sectors. I think we may not be as aware of everything that's going on, but things are definitely changing.
I guess we just want to see the results. And you wouldn't blame us for that.
You know, what's interesting on that point is, I think for those of us who are here, we don't see the results, or we don't perceive that there's change happening, because I think we want change to happen a lot faster. Or probably because we're in the situation, we don't really recognize it.
We're too close to see.
But it's very interesting, the foreign investors who came into Lagos this week were all talking about how things were different, right? In ways that the Nigerians had not really identified. So they can see the differences and changes. They can see more infrastructure. They can see, you know, many were telling me it was just easier to get through our airports, right? There are more restaurants. There's more activities, right? They are seeing a lot more demand for this capsule. I'd say they were more optimistic than we were, right? Which is a shame. So I think there's a lot here for us, and optimism drives investments. Optimism drives change. The U.S. has branded itself successfully as, you know, a place where you can chase your American dream. The truth is, more than half of the U.S. population is very, very far away from that dream that they've branded themselves with. What we need to start talking more about is the Nigerian hope, because there's a lot of that locally. There's a lot of opportunities locally. And we need to discuss that more and not wait for others to come in and tell us how great this nation is and how there's so much potential here. So I think the narrative needs to change.
Okay, maybe we'll ask the national orientation to help us better and all of that. But, so talking to entrepreneurs, would-be entrepreneurs, and, you know, individuals trying to get funding, they talk about government policy inconsistency. And this has been a discouraging factor. I wonder if that fear or concern came up in the course of your interaction with these investors.
I'd say that's certainly been a concern. But first of all, two things. One, it's not unique to Nigeria, right? Around the world, there are policy changes. I mean, the whole world has gone up in a bit of turmoil with policy changes in the US, right, on a tax issue. So it's not unique to Nigeria. But I think what's always important is to say, what are the trends, right? Are things getting better, right? I think that's what investors look at. And absolutely, you can say in Nigeria that things are certainly getting better. We're seeing on the monetary policy side, return to orthodox monetary policies, right? And that has led to just a lot of stability in our currency over the last couple of months, and that we expect to continue. I mean, the impact of that is huge. And again, I think for us, we don't really recognize it. We think of the pain in the past, and that pain still sits deep within us. But there are changes going on. On the fiscal side, there are lots of reforms going on as well, right, across different sectors. Maybe, I think all of us are impatient, and we would like things to move faster, but I think we have to look at the trends, and things are certainly getting better on that side.
All right.
I think it'll take a while to trickle down to the micro, right?
Which is where the larger number is.
Absolutely. That will take a while, but it is certainly happening.
All right. You also brought up the issue of pension funds, engaging pension funds more, you know, in this search for capital.
Yes. So one of the key challenges that we have as an industry is we've primarily been supported by foreign investors, right? So they've given us dollars to invest across the continent. As you know, a lot of our currencies have been devalued over the last couple of years, which has led to difficult returns, should I say, right? But what we all need to do is access capital from the local pension funds, right? Local pension funds are primarily invested in government securities. And it's not hard to see why. Interest rates are very high, right? Government securities are risk-free, they're liquid, and they're also tax-free, right? But what does private equity offer? What does infrastructure offer? What does venture capital offer? What does real estate investment firms offer? They offer diversification, which is also very important for pensioners, right, to ensure that the pension money is diversified. They offer actually long-term returns, right, that are higher than government securities or higher than the stock markets over a long period of time. But it takes a while. It's a slow process.
But they also bring risks.
There's certainly risk. There's risk.
And pension money is very sensitive money.
There's risk, and there's risk because of volatility. But again, if you look over a long period of time, private investments have outperformed public investments over a long period of time. So what we're saying is, you know, don't allocate 50% of the asset class to private companies, right? But also, you know, don't allocate only 0.1%. How about starting with 3% or 5%? It's not a huge number, right? But it will definitely help to, again, diversify the portfolio and increase the alpha in portfolios.
All right. Well, you just assume office as the board chair of the association. I wonder what you have up your sleeves.
I'm filling some very big shoes in the association. It was certainly an honor to be made the chair of the board, one that I don't take lightly at all. And working with the rest of the board, I think, you know, some of the things we're trying to do is, attract a lot more capital to Africa. And maybe it goes back to what I was saying early on about, you know, talking about the positives about the continent and speaking to investors, global investors from different parts of the world, and trying to get them to come into Africa. Because I think they see the opportunity from afar, but we need to tease them and make them come here, right, and see it.
But have you looked within Africa? Because with all that's happening, especially from the US, there's more talks now about AfCFTA, intra-Africa trading. Are you doing anything intentionally to push that?
We're doing both, yes. So I just started off talking about, like, just attracting investors, because we need the capital to continue to develop, while we're also working with the local pension funds, as I mentioned, right? The second thing is also, you know, we do a lot of advocacy work as well, right? And there comes in pushing on various reforms that could help enhance business and enhance trade. The AfCFTA is also extremely helpful, because we have actually very small, fragmented markets. And that whole idea of trying to unify and create a, you know, one large single dominant market will make it a lot more attractive for businesses as well as investors coming in. What we also do is convene, and we have this convening conferences once a year, where we bring investors and private equity fund managers and companies together such that people can strike deals, right? And we can hopefully, you know, sign documents and make sure that more capital comes into the continent.
Yeah, especially intentional. And you're working with the government, so the minister was there, I think the governor was there, and all the VIPs from the public sector. How much government involvement do you have?
As an association, we try to work with government, and we have a lot of interactions. And there's just really trying to understand government policies and making some suggestions here and there. Thus far, it's been a very good relationship. Yes, we had a minister with us who delivered some really well-received remarks. So we've had a lot of support, and I'm very, very grateful for that.
All right, thank you so much, and we wish you the best as you assume this office, board chair of African Private Capital Association, Mr. Danladi Verheyen.
Thank you very much. It's been an honor to be here.
All right, let's take a break now. When we come back, we'll head to the global space. To stay with us here in Business Morning. Welcome back. It's still Business Morning on Channels Television. From the global space, we see that the death of Pope Francis and global aid cuts led by the United States could complicate the work of a group of experts assembled by the Vatican to bring debt relief and a fairer financing system to the world's poor. Developing countries are already grappling with shrinking concessional financing and difficulty accessing bond markets because of the sell-off triggered by U.S. President Donald Trump's sweeping tariffs. The challenges were highlighted when the Vatican assembled group known as Jubilee Commission presented its draft plan for debt relief and affordable finance at the IMF and World Bank spring meetings. Less than a year ago, liquidity concerns for the developing world were a priority at such meetings, but concrete high-level talks to increase the amount of development and finance cash for emerging economies took a backseat. Notably, U.S. Treasury Secretary Scott Bessent said that the world's richest nation had not yet decided whether it will meet a $4 billion commitment to a lending arm for the world's poorest countries. And experts say the shift could sow seeds for slow growth and the next cascade of debt defaults. China says it is evaluating U.S. overtures to initiate trade negotiations, potentially paving the way for the world's two largest economies to start talks to resolve a trade war that has rumbled financial markets and cast a pall on global economic activity. Senior U.S. officials have reached out recently through relevant parties multiple times, they say, hoping to start negotiations with China on tariffs, according to a spokesperson for the Commerce Ministry. While assessing the possibility of starting any negotiation, Chinese authorities are reiterating Beijing's requests for the U.S. to remove all unilateral tariffs. Failure to do so would indicate an outright lack of sincerity from Washington and further compromise mutual trust. This is according to reports from China. U.S. President Donald Trump had slapped tariffs of 145% on imported Chinese goods this year, prompting China to impose retaliatory levies of 125% so far. Both sides have sought to blunt the economic impact of tariffs by granting exemptions on certain critical products. Chinese offshore yuan strengthened 0.14%, 7.2 against the U.S. dollar following this statement. While China's onshore markets are closed for a holiday, Hong Kong's Hang Seng Index jumped 1.6%. Temu is abandoning the model centered around cheap Chinese imports that could capitulate into the success into the United States, aiming to sell only goods from local merchants to American consumers for the foreseeable future. Meanwhile, it appears that Temu has removed all products in the U.S. version of its online store that ship directly to consumers from China, causing widespread confusion among both the company's suppliers and customers. The change seemingly happened earlier this week, just days before a trade loophole that allows American consumers to buy products from China without paying tariffs and is set to disappear as part of sweeping new import duties imposed by President Donald Trump. Over the past week, Temu has rolled out a number of whirlwind changes to its platform as it grapples with the impact of Trump's trade war on its U.S. business, which it built over the past 3 years, by offering products at astonishing low prices and promoting itself as a haven for bargain lovers. First, Temu announced that it would begin raising prices on products shipped from China starting April 25, but then things got a little more confusing. Japanese investors raised their foreign stock holdings for a 6th straight week as their sustained appetite for overseas equities was further bolstered by signs that the U.S. and China were willing to ease trade tensions. The local investors also viewed last week's stronger yen as an opportunity to enhance their overseas assets positions. The yen reached a 7-month high of 139.86 for a dollar before partially reversing its gains. Japanese investors allocated a net of 133.8 billion yen, that's about $920.85 million, to foreign equities last week, marking their 6th consecutive week of net purchases, according to data from Japan's Ministry of Finance. They also acquired a net of 435.2 billion yen in long-term foreign bonds. The MSCI World Index climbed to a 5-week high of 840.47, supported by progress in U.S.-China tariffs negotiations and strong earnings reports from major tech firms. Meanwhile, Japanese equities attracted a net 278.3 billion yen in foreign inflows, the smallest weekly cross-border investment in the past 4 weeks. Foreign funds cut their holdings of India's index-eligible foreign bonds by the most in a year, making it the biggest outflow after the nation's debt joined a JP Morgan Chase & Co gauge in June. Meanwhile, Indian government bond yields moved with a marginal upside bias in early deals on Friday, with a major focus remaining on the demand for a new 10-year paper that will be sold at the weekly auction later on today. The benchmark 10-year bond yield was at 6.357% as of 10 a.m. Local time in India, after closing at 6.35 in the previous session. The benchmark bond yield declined 22 basis points in the first month of the financial year, its biggest of such drop since March 2020, and it was after a 15 basis point decline in March. New Delhi aims to raise 360 billion rupees through the sale of bonds, including 300 billion rupees of a new 10-year bond, which will replace the existing benchmark bond in the coming weeks. Underlying sentiment continues to remain bullish, with the Reserve Bank of India set to buy bonds worth 1.25 trillion rupees in 4 tranches in the next 3 weeks. The central bank bought bonds worth 1.20 trillion rupees in April. Meanwhile, market participants will continue to remain vigilant for any news related to geopolitical tensions between India and Pakistan, and rates. India's overnight index swap rates were marginally lower as receiving buyers persisted despite swaps dropping for 4 consecutive months through April. In the UK, British home buyers significantly increased their mortgage borrowings, marking the highest level in nearly 4 years. That's for March. This surge came as buyers hurried to take advantage of a tax break before it ended. The Bank of England released data on Thursday indicating this increase. Net mortgage borrowing in the UK saw a rise by £12.96 billion, and this is the largest increase since June 2021. During the COVID-19 period, which led to a boom in the property markets. British oil giant Shell has reported a sharp fall in first quarter profit following a period of weaker crude prices. Shell reported adjusted earnings of $5.58 billion for the first 3 months of the year, beating analyst expectations of $5.09 billion. This is according to a consensus data that was shared. A separate company provided analysts' forecast had expected Shell's first quarter profit to come in at $4.96 billion, and Shell reported adjusted earnings of $7.73 billion over the same period last year and $3.66 billion for the final 3 months of 2024. The London-listed company has announced another $3.5 billion share buyback program, which is expected to complete over the next 3 months. It marks the 14th consecutive quarter of at least $3 billion in buybacks. The Shell CEO, Wael Sawan, describes the earnings as another solid set of results. The results come in as big oil profits continue to fall from record highs in 2022. A weak outlook for oil markets, falling crude prices, and U.S. President Donald Trump's fast-changing trade policy have rattled investor sentiment in recent months. For the quarter that ended in March, Apple and Amazon reported top and bottom line numbers that beat analyst expectations, joining their fellow Magnificent Seven counterparts, that's Alphabet, Microsoft, and Meta Platforms, on the podium. However, the financial results of both Apple and Amazon had some weaknesses under the hood. Apple's services division, which comprises offerings such as advertising, iCloud, and Apple TV+, fell short of estimates. That matters because it's the second highest revenue generator for Apple, trailing only its iPhone division. As for Amazon, its iCloud division, the largest cloud provider in the world, failed to meet revenue expectations for the 3rd time in a row, suggesting growth is slowing. CEOs of both companies also flagged the challenge in predicting how tariffs will affect not just the current quarter, but also the year ahead. Despite the excitement shown by investors over Microsoft and Meta, as seen in rallies in those companies' shares on Thursday, potholes still exist for big tech's road ahead. And NVIDIA CEO Jensen Huang has made tens of billions of dollars in recent years from his stake in the chip maker, but He's getting his very first salary increase in 10 years. Hang's base salary rose $1.5 million, and that's a 49% increase from 2024. This is according to proxy filing with the SEC. His variable cash also went up $1 million. That's about 50% from the 2024 fiscal year. Stock awards grew $38.8 million, bringing a total pay of $49.9 million. The Compensation Committee believes that this was appropriate in consideration of internal pay equity with the base salaries of other top executives, the filing said, and it represents Mr. Hang's first base salary increase in 10 years. NVIDIA is in the midst of a boom that's turned into one of the most valuable companies in the world thanks to its graphics processing unit that power the most powerful artificial intelligence models and workloads. Revenue in the 2025 fiscal year jumped 114% to $130.5 billion. The company reported in February that the stock's price increased more than ninefold between the end of 2022 and the end of last year. And so Hang's roughly 3.5% stake is currently worth about $94 billion. And his 2025 pay also included $3.5 million in residential security and consultation fees, driver services. The company says that in the previous year, residential security and consultation fees for him totaled $2.2 million. Well, you work hard, you get paid hard, but you wait for 10 years before that. Well, finally, Airbnb has reported results for the first quarter that were mostly in line with estimates, but the company issued a disappointing revenue forecast for the current period. Shares declined more than 5% for the second quarter, and it expects revenue of between $2.99 billion and $3.05 billion, or $3.02 billion at the middle of the range, according to analysts and forecasts. They see a $3.04 billion in revenue for the current period, and they expect the period to include a 2 percentage points benefit due to Easter timing, while the company says they experienced strong year-over-year growth in North America. Despite broad macro uncertainty, it reports softness in travel from Canada to the U.S. towards the end of the quarter. Most nights booked in the U.S. stemmed from domestic travel. Tariffs are the story again, hitting Airbnb. Well, those are the stories making the rounds in the global space. At 1 p.m., I'll be back with Business Incorporated. That will be updates from the world of business and the economy. So do join me then. I'm John Mekwa. Talk to you later.